Welcome to Pride Partners International's monthly webinar. Thank you for joining us today. Pride Partners International is a global partnership of firms and specialists in transfer pricing and financial valuation. The association is the meeting ground for professionals capable of facing a challenging business environment, helping them connect to boost their continuous professional development and enhance their technical and human skills and abilities. This partnership is made up of experts recognized by their trajectory and prestige in the transfer pricing and financial valuation fields. Experts that constantly participate in the exchange of technical information, knowledge development, and implementation of global best practices. When a firm joins the PPI partnership, it increases its scope immediately and exponentially. Business becomes much simpler by accessing training, technology, resource optimization, and new business opportunities, among other benefits. We invite you to learn more about Pride Partners International. Contact our agents and be part of the global elite of transfer pricing and financial valuation consulting. Our transmission will begin shortly. We invite you to participate actively by sending all your questions or comments through the live chat. Again, thank you for watching, and we hope you enjoy the event.
I am Maria Regina, International Tax Partner with Monteiro Diniz. We are very happy to have you with us for the webinar on the Brazilian tax reform, the so expected tax reform. And at the end of the presentation, we will also have an additional topic on the Brazilian transfer pricing legislation and methods, which of course could not be missed as we are a transfer pricing focused association, and which will be presented by João Soares, our transfer pricing partner. At the end of the presentation, we will leave you with our contacts, so if you have any questions, please do not hesitate to contact us. Enjoy. I'll start sharing my screen now. As mentioned, our agenda will comprise the Brazilian tax reform and an additional topic on a quick overview of Brazilian transfer pricing legislation and methods presented by João Soares. Firstly, it's very important to mention that the tax reform is still under vote. It has been approved by the House of Representatives, but is still under Senate's approval. In Brazil, we have two houses, which comprise the National Congress. So first, every project of law, which is the case of the Brazilian tax reform, goes over firstly by the House of Representatives, so-called Câmara dos Deputados, and then it goes to the Senate, so-called Senado. And after the Senate's approval, that is when the project of law begins a law effectively and then starts being effective. So according to the Senate's analysis, the terms of this webinar may be changed, and then of course we will update the webinar and leave you with an updated version. The first topic that we would like to bring is the taxation of dividends, which is really relevant. Dividends have been exempt from withholding income tax and from corporate income tax, of course, as well, since 1996. And the tax reform, the project of law, establishes that the dividends will now be taxed at a withholding tax rate of 20%, which is very relevant. An exception will be made to individuals who are shareholders of companies under the presumed profit method. That is one method of corporate income tax taxation, and whose gross revenue has been lower than 4.8 million Brazilian reais in the previous year. That will be the exemption from the taxation, but for all other cases, the dividends will now be taxed at 20%. Another important topic is a lower corporate income tax rate. The corporate income tax in Brazil is comprised by the corporate income tax, so-called Imposto de Renda, da pessoa jurídica, and a social contribution called Contribuição Social sobre o Lucro Líquido. As from January 1st, 2022, of course, if the reform is approved by the Senate, the new tax rate for the corporate income tax would be 6.5%, the nominal rate, and the surtax of 10%, an additional tax of 10% on the taxable income exceeding 20,000 Brazilian reais per month, or 240,000 Brazilian reais a year. Currently, this surtax of 10% already exists, so nothing changes regarding the surtax, but the main rate, which is currently 15%, will be lowered to 6.5%. CSLL, which is the social contribution on net profit, its rate will be lowered up to 1.5% to compensate in the same proportion the reduction of the renounce of the COFINS revenue expected for 2022. Currently, the CSLL rate is 20% for insurance companies, which have a higher rate, 25% for financial institutions, and 9% for all other sorts of legal entities. This is a large discussion why financial institutions should pay a higher social contribution on net profit, but this has been already settled. It had been discussed in the past based on the principle of equality between taxpayers, but this discussion have been already settled in court, so these rates are currently effective and no discussions have been raised since this settlement by courts. Additionally, as from January 1st, 2022, the quarterly assessment of corporate income taxes, the quarterly assessment regime will be mandatory for all taxpayers. Currently, we have the annual form of assessment of corporate income taxes, where you make anticipated payments monthly, and in the end of the year, you make a final payment. But this will be changed if the reform is again voted and effective. The quarterly assessment regime will be then effective. Another important topic is regarding the net operating losses, NOL. Currently, NOL may be offset without any limitation of time, differently from other countries. So you can offset your NOLs for as long as you would like, but you have a limit of 30% of your taxable profit. So, for example, if you have a taxable profit of 100,000 Brazilian reais, you can reduce it to 70,000 Brazilian reais because you can then make a reduction of 30% of your taxable profit by using your stocked NOL. Tax reform provides that the NOL may be offset without any lock, without such a 30% lock or any other lock, within the 3 quarters immediately after the quarter that generated the loss. So you will have a 100% offset of NOLs. This was another discussion in the past that taxpayers should be able to offset 100% of their NOLs, and now it will become effective, of course, if the reform is voted in this text as we are presenting you now, because there has been other versions of the tax reform project of law, but this is the one presented now to you. Is the last version as of September 13th, 2021. Additionally, each quarter, NOL subject to the 30% offset lock may only be used after the full use of the NOL not subject to the lock. So if we are saying that you can offset 100% of your NOL in the 3 quarters that follow the quarter that is generating the loss, when you are compliant with this rule, then you of course go back to the general rule of 30%, but that lock will only be effective after you have used the 100% availability mentioned in the item, the previous item. So this is very favorable to taxpayers. Another hot topic is the standardization of IRPJ and CSLL calculation bases. This has also been a discussion for a long time, and there have been some rulings and additional legislation equalizing the corporate income tax, IRPJ, and the CSL calculation basis, stating that they are the same. But that has been bringing some questioning. So the tax reform now affirms that they are, both calculation bases are the same. There are some very specific differences between one and the other. There are some very few items that are different between one calculation basis and the other. And now with the tax reform, this become totally equal, the calculation basis for these two taxes. Another important point is the new tax rate chart for individuals. What happens is that we have a higher limit of exemption. So currently, the exemption range for individuals is 1,903.98 Brazilian reais. And now, if the reform is voted under this version, the exemption range would be 2,500 Brazilian reais. So you have a higher volume of exempt taxpayers. This change of close to 600 Brazilian reais, it seems small, but it represents a very, very large portion of the population that would then be exempt from the individual income tax. This chart here in red shows the new ranges and the tax rates that would be applicable, as well as the deductible portion of each revenue, each range revenue of taxation. Another very important topic is the creation of Brazilian VAT, which will be called CBS, which stands for Contribuição Social sobre Operações com Bens e Serviços, and would substitute PIS and COFINS. PIS and COFINS are social contributions that currently are levied at a rate of 0.65% for PIS and 7.6% for COFINS, then summing a total effective tax rate of 9.25% for the non-cumulative tax regime, which is the one that allows you to use tax credits from the previous steps of a chain of production or service. Now, of course, PIS and COFINS, they are currently levied on all your revenues in spite of their name, of their nature, exception made only to recovery of bad debt, for example, or recovery of expenses which are not revenues in essence. So one big change is that the CBS will be levied on only your gross revenue and not anymore on the totality of your revenue. This is one big step for this VAT. This has been a very big discussion on whether whether PIS and COFINS should be levied on the entire amount of revenues. There has been some discussions regarding the Constitution. There has been an amendment to the Constitution, and then we have currently two legislations involving PIS and COFINS. One is the cumulative tax regime and the other is the non-cumulative tax regime. These two legislations have been effective in different times. The first one, when the Constitution mentioned that PIS and COFINS should only be levied on the gross revenue, and then there has been an amendment to the Constitution saying that the taxable basis would be the gross revenues plus any sort of revenue. And this change happened, some sort of in a mislead. And then another legislation has been approved after this amendment, right after the amendment, a few days after, now establishing that PIS and COFINS will be levied on all revenues. So this has been a discussion for a while. Of course, the law that was born after this amendment, of course, it's legal, but the first law also tried to tax the entire amount of revenues and was regarded unconstitutional because of the former wording of the Constitution. So this is a very big discussion, but has been has outcome on the non-constitutionality of law 9718, and then which provided for the cumulative tax regime, and then the new legislation for PIS and COFINS, which is the non-cumulative tax regime, was born under another cradle of the Constitution. So the first law was regarded unconstitutional, and then another legislation basically was born with the non-cumulative tax regimes, but levying PIS and COFINS on the entire amount of revenues. So the general tax rate for CBS would be 12% for regular taxpayers and 5.85% for financial institutions. As mentioned, it will be levied only on the gross revenue instead of all revenues, as currently it is. It will be regarded as value-added tax of broad base, and every credit linked to the company's activity will be entitled a tax credit, and cumulative credits will be refunded. That's a big change as well. Currently, you can use tax credits that come from activities, of course, linked to the company's purpose, but the ones that are regarded effectively of the essence of the operation. So currently we have this concept of the essence of the raw material, the essence of the service that is used in the production process when we're talking about service companies. This is a very difficult concept because you can say everything that I use will be linked to my purpose. Even the back office activities are linked to my final purpose of the company. But there have been theses, and one has been settled by one of the Supreme Courts in Brazil. And the concept of the raw material that is used in the production process is strictly related to the essence, the essentiality of its essentiality on the production process. Now with tax reform, every credit linked to the company's activity will be available for tax credit. And if you have a balance of these credits that has not been used, then you will be refunded by this amount. CBS levied on previous phases and detached on the invoices will be credited against CBS levied on future phases. This is it's very important as well, but a concept that is already used. Another very important topic and new topic is that CBS tax credit will be offset against other taxes or refunded. Currently, tax credits are only offset against the social contribution itself. So when we are talking about PIS and COFINS, it's tax credits that are calculated on the expenses that are regarded as raw material or as an essential service to the chain. They are a base for the calculation of the credits. For example, if you had 100 reais of expenses on raw material or services that are necessary for your activity, then you calculate 9.25% on these 100 reais, and this amount would be reduced from your PIS and COFINS payable. So basically, you calculate PIS and COFINS on your revenues at 9.25%, and you calculate 9.25% on your expenses as well. On your expenses, of course, that are regarded as raw material or essential to your service or products that is being produced. This is a very big step as well. And finally, other consumption taxes, such as the excise tax, so-called PPI here in Brazil, the tax on circulation of goods, ICMS, and the tax on services, ISS, will not be taxed. This is another thesis, another discussion that, for example, ICMS is not taxable, does not comprise the PIS and COFINS calculation basis. This has been a thesis that has already been settled by the Supreme Court. So ICMS is not taxable for PIS and COFINS. This is not a revenue for PIS and COFINS purposes. And according to the tax reform wording, CBS will not be the consumption taxes will not be taxed on CBS calculation basis. This is very important as well. So it ends the discussion on whether these taxes should be taxable or not on the calculation basis of CBS. And of course, CBS will not be levied on itself. So the amount that is recorded under the balance sheet that comprises CBS, because this can be a little tricky, but I will explain in another way. CBS, as well as physical things are today, is part of your revenue, because when you issue an invoice, then you declare in your invoice your revenue, the amount that you are charging for your service, or the amount that you are charging for your product. And part of this revenue is PIS and COFINS, ICMS, that is levied on this sale. So in a certain way, the revenue that you will record under your balance sheet, part of it is ICMS, for example, or IPI, for example, because the amount that you will record on your balance sheet as revenue will be the full amount. But then, of course, the next step will be your payments on these taxes that are detached on your invoice. So you will pay ICMS on this revenue, you will pay PIS and COFINS on this revenue. So in a certain way, those taxes, they are parts of your revenue. That's the thesis, that such taxes, they are parts of the revenue that you account for, but they are not your gross revenue. They are not your effective revenue. So that's why there is this thesis saying that such consumption taxes that are automatically linked to your invoice, they are not taxable for PIS and COFINS. This thesis has been settled regarding PIS and COFINS, And for CBS, if this wording of the project of law is approved by the Senate, then you wouldn't have to worry about that, because that would be already very clear in this legislation. Well, these were the main topics of the Brazilian tax reform. I will leave you with our contacts. Please feel free to contact us if you have any questions. I know that some of these topics can be very tricky, especially for someone who's not so used to Brazilian legislation, which is in fact very complex. Please contact us, let us assist you in any way we can. It has been a pleasure to discuss these topics very briefly with you. And I will leave you now with João, who will talk about the transfer pricing legislation and methods. Thank you.
Hi everyone, I'm João Soares, partner responsible for the transfer pricing at Monteiro Diniz. I would like to thank you everyone for participating in our webinar and say that we are very happy with the feedback we received. I will share with you a little presentation as well. Just a minute. Well, our main idea today is to bring you briefly what the requirements of Brazilian rules regarding transfer pricing are, as well as talk about some controversial points. Starting with our legislation, and already there, we can raise a controversial point. The Brazilian transfer pricing legislation had as its initial basis on OECD standards. However, in view of the main characteristic of collection by the Brazilian tax authorities, our rules were readjusted and they do not aim at the same targets as the standards set out in the OECD. As proof of this, we can see the PRL method. Sorry. The presentation is stopped. Okay. Well, we can see the PRL method, that means resale pricing minus profit margin, which has predefined profit margins for each business sector, being 20, 30, or 40%, where 20% fit the vast majority of industries, and 30% and 30% are applied to specific sectors such as pharmaceuticals and chemicals products. Furthermore, no other assessment regarding economic, organizational structure, and other criteria is made in calculation by the Brazilian transfer pricing rules. With this, we conclude that the OECD rules were really just triggers for the Brazilian rules to be planned. However, at the end of their formulation, they were totally modified to meet the needs of the Brazilian tax authorities. Now talking about what we found in the Brazilian transfer pricing legislation, we start with basic division, which is the import and export operations. And then the legislation has 4 calculations methods for each one. That is 4 methods for imports and 4 methods for exports. I will talk briefly about them as well, because our idea is to format the details of the methods and applications, and also demonstrate some practical cases. But going back to the methods, in addition to the 8 methods, that we mentioned, we still have the obligation to evaluate the loans taken or transferred using another methodology. And also in relation to exports, there are 3 safe harbors defined in order to facilitate the preparation of supporting information. We will start with the method that I thought one of the most complex defining the legislation, is also the most easily accepted by the tax authority, which is the PRL, as mentioned before, resale price minus profit margin. Now, why we say it's the most accepted methodology? Simply, because all the information necessary for the calculation is available to the Brazilian tax authority, as it's information normally already delivered by the taxpayer in its accessory obligation. Okay, talking about the definition of the method, the PRL methods compares amounts charged in related party transactions with the arithmetic average of the resale price charged for goods or rights minus unconditional discounts granted, tax and contributions levied on the sales, and commission paid, and the profit margin of 13%, 30% for pharmaceuticals products, smoke products, opticals, photographic, instruments and equipments, medicals, dentals, and hospital machineries and equipments. 30% for chemical products and glass products and others, and 20% for other sectors in general. As I mentioned earlier, a large number of sectors are automatically included in these 20% rules, such as vehicle importers, computers, peripherals, resellers, among others. It's important to mention that Brazilian legislation allows the taxpayers to choose the method that best suits them. Therefore, the other methods that I will talk about, the Brazilian taxpayer can, taxpayers can, for example, in case of major adjustments identified, the PRL method, apply the PIC method, that means comparable independent price. Or the CPL method, cost of productions of the goods abroad plus 20% profit margin. Being only restricted to applying the PCI method, which is an exclusive method for commodities. We will also talk in a little about it later. Next, we have the PIC method, which is the comparable independent price, that compares amounts charged in related party transactions with the arithmetic average of price of identical or similar goods, services, or rights within the Brazilian market or in other countries in purchase or sales carried out between unrelated parts and under similar payment conditions. The price of goods, services, or rights acquired abroad from a related part are compared with price of identical or similar goods, service, or rights in 3 possible conditions. First, sold by the same exporter to a resident or non-resident unrelated legal entity. Second, acquired by the same importer from a resident or non-resident unrelated legal entity. And 30, in purchase and sales operations carried out between resident or non-resident related parties. With the exception of commodities, the last method valid for all other cases is the CPL method that compares amounts charged in related part transactions with the average cost of productions of identical or similar goods, services or rights in the country where they were originally produced by tax charges in such country on the exports and a profit margin of 20%, calculated on the cost assessed. Finally, we have the PCE method, which is a specific method for commodities import, and its defining is given by the daily average amount of quotation of goods or rights subjected to public prices in future and commodity exchanges internationally recognized. As from January 1st, 2013, PCI method is mandatory for import of commodities transactions. Price of goods imported compared with the price of quotation as such goods, adjusted for more or less than the market average premium and the date of the transaction. As I mentioned before, just like for imports, exports also have 4 methods, but it's important first to point out that in the case of exports, we first evaluate the safe harbors. This safe harbors was described in the legislation, which are the safe harbor of profitability, the safe harbor of representativeness, and what we call absolutely safe harbor. Objectively, the profitability safe harbor expects the Brazilian taxpayer not to carry out operations with related part abroad greater than 20% of its total operation, as well as to prove at least 10% profitability in these operations. And the representativeness safe harbor expect that the taxpayer not to have operations of exports related parts greater than 5% of its total net revenue. And if the taxpayer is benefited in either of the 2 safe harbors, is it released from the preparation of the tailored calculations by item, and can thus only present its balance sheet to the tax authorities in case of inspection. In the last case, if the company in question does not get the benefited for one of the 2 first safe harbors, it's still possible to apply the absolute safe harbor that assess either the operations of the items exported to related companies abroad represent at most different greater than the price in domestic market at 10%. The company is also released from preparing the calculation use one of the available method. Thank you. Well, after evaluating all the safe harbors and not being benefited by any, the taxpayer must adopt one of the methods available in the legislation, namely CAP, PVEX, PVA, PVV, and PSEX. The CAP method is defined as the arithmetic average of the acquisition of or production costs of goods, services, or rights exported, added by tax levied in Brazil, and a profit margin of 15% on the sum of cost plus tax. The PVEX is defined as the arithmetic average of the sales price on the export operations carried out by the taxpayer to other unrelated clients or carried out by another national exports or identical or similar goods, service, or rights during the same tax year and in similar payment conditions. The PVA method is defined as the arithmetic average of the sales price of identical or similar goods priced in the wholesale marketing in the country of destiny in similar payment conditions, minus tax included in pricing charged in such country, and a profit margin of 15% on the wholesale price. The PVV method has the same definition, the PVA, but with the difference that the operation is in the retail market and the percentage is 30% in total. And finally, we have the PSEX method that is defined as the daily average quotation of goods or rights subjected to public prices in futures and commodity exchange internationally recognized. As mentioned before, as from January 1st, 2013, PSEX is mandatory to commodity exports operations, subject to quotation in internationally announced future and commodity exchange. Price of goods exported are compared with the price of quotation of such goods, adjust for more or less the market average premium in the date of the transaction. These are the main points we would like to share with you. And again, mention that for our next webinars, we will go into more details on each type of methods. Thank you all and see you soon.
Thank you, Joel. That was very nice. Well, thank you very much for joining us. Please reach out to us if you have any questions or would like to share any experiences. We will be very happy to assist you in any way we can. Thank you.
Thank you.